All right, so today I wanted to share with you one of the easiest trading strategies that I've developed. This is based on existing concepts, so it's nothing new, but I've been able to strip down certain strategies that have worked for me in the past to the bare bones, so it becomes easy for beginners to understand and follow. So the reason I developed this strategy is because a couple of my friends wanted to learn trading, they wanted to get into trading, but they're complete beginners, so I wanted to create something that would be easy for them to understand, because the trading strategy that I personally use might be too complicated for a complete beginner. So I wanted to take parts and aspects of it, of the strategy that I use, to come up with something really simple and overall is just beginner friendly, so easy for people to follow. So that was my goal when trying to come up with this strategy. And so both of my friends that implemented this strategy were able to become profitable. And so I wanted to make a video and help more people out to put this strategy out there. What we're going to do is go over what the strategy is, take a look at some examples on the chart, and towards the end of the video I will give you the entire blueprint of how you can make $10,000 a month using this strategy. I'm going to give you every single rule that you need to follow. If you follow everything to a T, you can easily make $10,000 a month. So in trading, it's really important to set goals, especially as a beginner. If you don't have a goal, you don't know what you're doing. Even if you have a good strategy that works, it is extremely important to have a goal that you can reach using that strategy, so you have something to aim for and you're not just wandering aimlessly, jumping from strategy to strategy, trying to figure out how to become profitable. The truth is that most strategies out there work. What you need to learn is how to make something work for you, because everyone is different. Everyone has different ways of looking at the chart. There's different things you spot. Some people identify certain patterns more than others. There's a lot of differences. So the way you can find something that works for a lot of people is by making it as simple as possible, stripping it down to the bare bones. And that's what I've did with this strategy the best I could. It is pretty simple. It's super easy to follow. So we're going to go over what the strategy is. All right, so let's see how this strategy actually works. So we have a little bit of price action movement here. We have an uptrend where price moves up, creates a pullback, moves back up, breaking structure, which means you're in an uptrend, pulls back again, has another leg up, then starts to move back down. So how would you trade something like this? So the way this works is we're looking at the swing points that break structure. So let's start on the uptrend here. So we're looking at bullish examples first. So we have price moving up, pulling back, moving up, and it breaks the structure, which breaks the previous high that's over here. So once it does that, we're looking at this swing leg, this move up, and we're going to go back to the beginning of the move, and we are going to mark down the lowest candle in here. Now this candle can be bullish or it could be a bearish candle. That doesn't matter. It's irrelevant. You don't have to worry about what kind of candle it is, what it's doing. All that matters is that it is the lowest candle in this up move. So what we're going to do is mark out the candles high and low. You can use the rectangle tool to do this. So we're going to mark that out over here. And the important part is to have the 50% middle line, which is the equilibrium of that range. And if you don't see that, just double click on the rectangle and make sure your middle line is enabled right here. And that'll give you the 50% of this candle range. So we go from the high of the candle to the low of the candle. And what we're waiting for is for price to come back down into this zone for us to take a trade. That's what the strategy is. This is a bullish example. We can mark out another one here. So once price moves up here, creates a pullback, and then starts moving up. And once it closes above this previous high right here, we can look for the lowest candle in this region. And we can mark out the low and the high of that candle right here. So let's say there's a candle here, and we just mark out the highs and lows and the 50% of that candle. And then we're waiting for price to turn back around. So once price starts to move back down and starts approaching the zone, all we're going to do is set our limit orders. Your entry is going to be at the 50% of the candle range right here, and your stop loss is the low of the candle, and we're aiming for 1 to 1.5 risk reward ratio. So that is all there is to this strategy. It doesn't get any easier or simpler than that. So what you're going to do, we're going to take the limit order here. We're going to set the stop loss here on the low of this range and aim for 1 to 1.5 right here. And as you can see, it does work here in this case. And then we could do the same thing down here. We have our limit order set for this entry, and we're looking to aim for 1 to 1.5, just around there. And as you can see, it works out in this case as well. So this is how the strategy works. It's pretty easy. Once again, you're looking for a move up. For a bullish example, we're looking for a move up that breaks a structure before it. So it breaks this high, that makes it valid. And we're looking for the last candle that created the low in this move. So the last candle is your turnaround candle. And it works the same way for shorts as well. So let's take a look at a bearish scenario here. We have price moving down, creating lower lows and lower highs. So once price breaks this first structure here, we have this high, we have a pullback, and then the price breaks below the structure and closes below the structure. We're not looking for wicks. We're looking for body closures below this structure right here. So once we break this low and close below it, we're going to look for the turnaround candle up here, which is going to be the last candle that created the high in this zone. So we're going to mark out the high and the low of that candle and find the equilibrium to set our limit orders. So we're going to go ahead and set a limit order here, and the stop goes on the high of that candle range, and the take profit is 1 to 1.5 around there, and that is going to be your trade. So once price starts moving back up, we set that limit order here, and it might not always come back here. It might move lower, but we just follow price at what it's doing. But whenever it does come back to this zone, you can easily expect to get at least a 1 to 1.5 trade out of it. Even in scenarios where price is going to break out of this area and move up, there's a high possibility that it's going to have a little bit of a pullback before it moves up. So that's why we are aiming for 1 to 1.5. We're not aiming for these lows or something else out here, something lower. We're just looking for that tiny little move that gives us 1 to 1.5 risk reward. So that's what we're looking for. And let's take a look at the next zone here. We have another area where price breaks the low. Price breaks this low right here with this move down, and we are marking down the last turnaround candle here, right here. That is our turnaround candle. We mark the highs and the lows, and we set our limit orders here for price to go lower before it moves back up. So you can see how that works, and it's that simple. So this strategy has about a 50% win rate, which might not seem high to a lot of people, especially for beginners, but you can still be extremely profitable with a 50% win rate. One of the reasons is because you're aiming for 1 to 1.5, which means you're going to make more on your winners than you will lose on your losers. So now we're going to look at some real life examples on the chart. All right, so here we are on the first example here. First thing we look for is the trend. We're in a downtrend right here. As you can see, price is creating lower lows and lower highs and closes below this low right here. So once it does this, closes below a previous low, right here we have a candle closure. So we're going to go back up and look for the turnaround candle. So we have the turnaround candle right here, which is the highest candle in this move down. Because we are in a bearish trend, we are looking for the highest candle in the swing that broke a previous low. So we have this candle right here. We're going to mark the high and the low of that candle, and we'll see if price wants to retrace to this zone right here. And if it does, we will take a limit order out of this zone. So what is that going to look like? We are going to set an order here. Our stop loss is going to be right here. And let's zoom in a little bit. And we have our 1 to 1.5 around there. So next we just wait for price to reach back into the zone. Right here, as you can see, right away it delivers the 1 to 1.5. So price reaches into the zone. That's where you get tagged in with this candle right here. And you get a little bit of drawdown, which is fine. And then price moves down to your take profit. See what it does after that. Look at that. It breaks up. Even when price is moving up, you can still expect to get this much of a move down from the turnaround candle, because this turnaround candle broke structure. We can expect price to have some sort of a reaction here that gives you enough to take a short out of here, aiming for 1 to 1.5. So let's take a look at another example. So this is the second example here. We are looking at price moving up and then break structure again to start moving down. You have to have price break some kind of structure for you to be looking for the turnaround candle. So once it closes below this low, we can go back into this move and look for the highest candle. Because we're looking for shorts, we are looking for the highest candle in this move down. The highest candle here is this one right here. So we're going to mark out the low and the high of that candle, and we have our 50% zone here. The trade is going to look something like this. Your limit order is going to be here. Stop loss goes right here, and you're aiming for 1 to 1.5. So around there is your target. So let's see if price reaches back into that zone. So we have another move down, and then price starts to climb back up. Let's move this over here and see what it does. So price is starting to creep up into the zone right here. Let's see if we get our entry. Move it over a little more. So we're still waiting to be tagged into this trade. And we still have nothing. And there you go. So now you're entered into the trade right here. You are in the trade, and let's see how this plays out. There you go. So the price hits the target here. 1 to 1.5 is delivered, and what does price do afterwards? So it starts to move up again. So this is what I mean. Even when the price is bullish, because it has turned around here by breaking this structure right here, and it's now in an uptrend. Even in that uptrend, you can catch this pullback. Why? Because you've marked out the turnaround candle here, which broke structure. So this move really validated it, because it also broke this structure here. So even on the higher time frame, you would have this candle here that makes it a valid trade. So you enter here, and your take profit is hit right here. So it's another profitable trade. Let's take a look at another example. All right, so this next example here is also on the same day, on December 3rd. We are on the 1-minute chart on the NASDAQ. We have the price move up and break this structure right here. So it closes above this pullback right here, which means we now look for the lowest candle, because we're looking at a bullish example here. So price broke above, so we go down and look for the lowest candle in this move, which is your turnaround candle, which is right here. And we mark out the highs, the lows, and the midpoint of that candle. So this gives us our entry, which is going to be here at the 50%. Stop loss goes on the candle's low, and you're aiming for 1 to 1.5 around there. And we're going to play this and see what happens. So price starts moving down, has a little bit of bounce there, and we're still not tagged in. Price came close, but we're not tagged in yet. There you go. We have and right away. So you get tagged in on this candle, and the next candle you have your take profit. And let's just see what price does after. So it does go a little higher in this case, but it really doesn't matter what you're looking for. It just this move right here. That's all you need to be profitable, and that's all that matters. So let's take a look at the final example here. This time we're on the 5-minute chart instead of the 1 minute. So this works on every time frame. It doesn't really matter. But for the plan that we're going to lay out later on how you can make $10,000 with it, we're trading on the 1 minute for that strategy. But it also works on the 5 minutes. So we're going to look at this. So we have price starting to move down here, and we have a low candle here, but did it break a structure here? We don't have any highs in here that the price has broken. So even if price comes down here, we're not going to mark this candle down because it hasn't broken any structure. So we still don't have enough information for how this move is going to work out. So let's see what price does here. We can have price break down, or okay, it starts to move up here. So we'll play it out. Okay, so now it closes above here, has a strong close over this move high. So this is a swing point that created this low, and price moves up and closes above this high. So now this low is validated because we have price closing above, breaking structure. And so we're going to mark out our turnaround candle, which is this one here. We mark the lows and the highs right here, and the 50%. So if price turns around and comes back into the zone, we can set our limit orders to take entries. We'll see what price does. There's a chance it could just keep going and not come back. Okay, so it's starting to come back down here. There you go. We have this move down, and it's starting to move lower. So we can take our limit orders, and the stop loss goes at the low of our turnaround candle, and we're aiming once again for 1 to 1.5 right here. And let's see how this plays out. Okay, so the price instantly gives you that win right here. You get tagged in with this wick and immediately goes back up and hits your take profit. So that's another winning trade, and whatever happens after this doesn't really matter, and price moves up. Yeah, but we're not worried about this move because it could have easily gone down here. But all we care about is this little move. So that is all that you need to be focused on or looking for, is this little move right here. It doesn't matter if price goes up or down from there. So that's how this strategy works. It is super easy to follow. So like I mentioned before, this strategy has a win rate of about 50%. There are going to be losers. There's going to be times when price gets really close to your take profit and turns back around. And then other times where it's just going to go through this zone entirely, completely ignoring the zone. It's just going to fall right through it. And that's fine. We're going to have losing trades. We're going to have winning trades. What is important is that you execute every trade, and that way, whenever you have winners, you are winning more than when you're losing. So the combination of a 50% win rate with the fact that you are making more when you win a trade versus what you lose on your losers, you are going to be profitable in the long run. It's all a game of probabilities. You're going to have winning streaks and you're going to have losing streaks. But if you do have a losing streak, a lot of people at that point just want to give up on the strategy and try to hop on to the next thing. They think, oh, it used to work. It's not working anymore. This doesn't work. I need to find something else that works. That's where they're wrong. And that is what's going to ruin your chances of becoming profitable as a beginner. That's why you hop around from strategy to strategy. Something works in the beginning and then it stops working. The only reason it stopped working is because you quit at a losing streak. If you kept going, the odds of being profitable in the long term are in your favor. All you have to do is keep executing the trades and let the numbers play out. You can use this to make up to $10,000 a month. So we're going to go through that now. I'm going to give you a list of rules to follow, and all you have to do is follow those rules to a T and execute when you find your trade, and keep your emotions out of it. This is not financial advice. I'm only talking about paper trading, but I'm just trying to teach you how price moves and how you can paper trade using this strategy. So now let's take a look at how you're going to utilize this strategy to make $10,000 a month. So that is our goal. It is extremely important in trading as a beginner to have goals. Our goal that we're going to set is $10,000 a month. So we're going to follow the steps that are required to get there. So that is the first thing you need to do when coming up with a goal or a strategy to achieve a goal. Is once you set a goal, you're going to work backwards on how you can reach there. So how many trades do we need to reach this goal? So based on the plans that we've created, we are looking at a total of 100 trades, and that can be over the time frame of a month or 2 months, whatever works for you. If you're aiming to get these trades inside of a month, you are looking at taking at least 5 trades a day. So every trading day, you're looking to take at least 5 trades. And that doesn't mean you have to have 5 winners. It could be 5 losers. It could be 2 winners, 3 losers. It doesn't matter. The result of individual trades is the last thing you should be worrying about. That should not be a concern for you at all. Your job is to execute. The next thing is your win rate, which is, as we discussed, 50%. So, which means on average, if you take 100 trades, you're going to have about 50 wins and 50 losses. And our risk reward, as we went over previously, is 1 to 1.5. The next thing is the risk per trade. How much do you need to risk to make $10,000 over a course of 100 trades? At 1 to 1.5, you need to be risking $500 per trade. So that is your risk per trade. So every trade you take, you are risking $500. And you could do this on a funded account. That is the best way to do it for beginners. That's what I would recommend, is using a prop firm as a beginner and not to use your own money. So the next thing we're looking at is your wins and losses. So if you lose $500. And if you win, you're winning 1.5 of your risk, which is $750. So that's what we're looking for. Your winners to be at $750 and your losses are going to be at $500. So if you have 50 winning trades, that gives you $37,500 of total profit. And then you have 50 losing trades times 500, that is $25,000. So your net P&L at the end of it is going to be $12,500. And we can account the additional $2,500 for slippage or commissions or other fees. So that brings your final profit to $10,000. So as long as you have 50 winning trades and 50 losing trades, you're making $10,000 in profit. So now let's take a look at what is your role as a trader. So what's your role as a trader is very simple. This is all you have to do. You have to identify your turnaround candles. And the next thing you got to do is execute those limit orders. You're not going to be worrying about one single trade or series of trades or anything like that. It doesn't matter if one trade loses or wins. That is not your concern. Your only goal is to hit 100 trades. So you have to be focused on executing 100 trades. And the last thing you got to do is journal the trade. So how you do that is you're going to take a screenshot before and after a trade. And you can document that however you want. Just make sure to journal the trade so you have something to look back on. And that is going to teach you a lot and give you a lot more confidence as a trader going forward. This is very important, especially as a beginner. Find a way. I don't care what it is. All you need is a place to place 2 screenshots, one before and one after the trade is over. That's how you journal the trade. So that's it. That's how it works. And now you have everything you need to execute this plan. You can make a plan of reaching this goal within 1 month, or you can make it 2 months. If you're going to go for 2 months, you're looking at taking 2 to 3 trades a day. and your goal is to reach 100 trades. And at the end of it, you are going to be profitable as long as you stick to the rules explained in this video. So that's going to be it for this video, and I'll see you in the next one.